today I want to go over how I took last week's trade on Friday going into the weekend and took profit during Monday. So today I'm going to show you also what it's like to trade SMC and basically the steps that I take to enter a trade. And I'm going to show you guys here and go back and show you guys what I did here. So let's go ahead and take a look at the charts here. We are currently on GJ on the 30-minute time frame, and here's the secret that I use for market structure before I get into the trade here. I usually go on the 30-minute time frame, and then I zoom all the way out, literally just all the way out until you can't anymore. So you see how I'm zooming all the way out and I can't? That kind of reveals you the automatic structure versus going like this. And yeah, you can still see it, but the reason why I zoom all the way out is because sometimes you'll see, like if you look back here, something can tell you it's a different trend if you zoom and see the bigger picture. Okay, so now that I'm on a 30-minute time frame, what I did was I identified with my purple brush tool, as you can see on the screen, my highs and lows, which were, I had 4 pieces of structure that were both the structure that I wanted to see. So I had 2 highs and I had 2 lows, 2 lower lows and 2 lower highs that actually broke a piece of structure and that had unhealthy price action in it, and that turned into a valid range. And so your current range is always going to be your current 2 pieces of market structure. And depending on what you trade, I trade Wyckoff and I also trade supply and demand, order blocks, fair value, all that stuff. But to keep it basic, I'll just say supply and demand today. I don't really show much Wyckoff schematic videos, if you're wondering, on YouTube, because people usually it takes more effort to learn that, and people that actually have passion. So I don't teach that method because people are lazy. But for example, we had a supply zone on the time frame here that tapped into, and then we had a, what's it called? We had this liquidity that was sitting on top of here, right? And then this liquidity gave me basically extra confirmation to enter the trade. So once it actually hit the gray zone up here, and I'll put a marker right there so you guys can see what I'm talking about on the green above on the right side. Once I saw that there, and then I saw it leave that gray box area, I basically just went ahead and entered here anyway because I knew it was going to break this liquidity, because usually that forms to give me extra confirmation, and I see it forming after I identified the structure, which is we're on a downtrend, bearish trend, down structure, descending structure. So this liquidity actually confirms the direction even more. So that's a tip you guys can write down in your journal. Like, liquidity confirms direction. Okay, and so this would be sell side liquidity since we're selling rather than buy side liquidity. Okay, so what I did was I identified potential area. This last one isn't liquidity. This is just a take profit zone. So let me just move that. So I entered there when it left the gray box, knowing it was going to crash here eventually and break this green liquidity line with the dollar sign. So once I entered, it came down here. Follow my mouse. It came down here. It tapped. It bounced off that gray, off this line here, off this support, which people would trade off of. And if you do trade support and resistance, that's fine too. I don't like talking shit about people's strategies. I don't trade it. I usually use support and resistance as my take profit, but basically people would enter. This is an area where all these retailers are entering, and smart money makes money off of you guys. So that's all I'm saying. And so wherever you guys enter is where I'm going to be taking profit. So basically it bounced off. Okay, it came back up here before hitting that order block. I just now noticed that there's an order block right there. Okay, so it hit this zone, went back into my stop loss area, hit this zone, then came down, broke a piece of structure. We had to break a structure right here where I'm writing. Okay, it's not showing up, but where that green line is to break a structure. Then it came back, pulled down, and went through that fucking liquidity zone. And what I can do is I can look for a redistribution, if you know what that is, or you should probably know what that is anyway if you want to know how the market works, or another supply zone. So we have many order blocks that I can potentially look for more sales off of if the market does indeed continue going down. Basically, this is what I did. So if you want some steps to to write down so you know how to do this if this is confusing, because I know I'm not the best talker. I'm not really that good at articulating things, so I try the best I can. But what you can do is step 1, identify structure. And actually, you know what? Let's write it together. Step 1, identify, because I want you guys to understand what I'm saying, so I don't want you guys to go here and then not understand me, because I know it's annoying when you're trying to make money and you can't understand what I'm saying or what people are saying. So step 1, identify your market structure. That means I look for highs and lows. 2, you need at least 4 pieces of structure. 4 pieces of structure. Okay? You need 4 pieces of structure. Identify structure. That's your first step. Okay? Then the second step is identify premium discount or blah blah, or identify supply and demand. So if you're selling, are you going to enter a trade on a supply zone, or are you going to enter a trade off of a demand zone, right? So what do you think? It's pretty obvious, right? When you're selling, that's supply. Demand equals buy, okay? Supply, sell, demand, buy. Supply, you sell off the supply zones and you buy off of demand zones. So we identified our structure, which we had in the purple lines there. We had 4 pieces, okay? See, you know, we'll do it together live. So we had 4 pieces of market structure. We had a high, forget that text there. We had a high all the way back here. Then we had a low. Then we had a high. Then that high broke the low. So these are all confirmed pieces of structure. And not only that, we also have unhealthy price action to even confirm that this is what I'm talking about is right, such as this right here, the black candles going downwards. And yeah, and the reason why I have black and white candles, guys, is I like to keep things simple. I don't like color on my business stuff. I like to keep things boring and professional. And it also gives a good contrast of buying and selling when you have all these colors. It confuses you. So this is how we do it in my group. You can do your own. I don't care, but this is how I do mine. So we have our structure. Step 2, supply. Identify your supply and demand zone. Okay? Or zones. And we did there, that gray box. On another time frame, that was a gap. And it rejected off of that gap. It came off of that gap. Okay? So normally when you're a beginner, when you see a gap, if you're first time trading, what you can do is wait. You could have waited for price to break the liquidity here where I'm pointing to on the screen, and then enter trade after the structure was broken, after price goes into your gray box. So when price goes to your gray box and you're a beginner and you're not so good, you can wait for a break of structure and then enter, like here. Okay? But for now, I can just do this because I've been trading for a couple of years, 4 years. So I identify my supply and demand zones, okay? And then I'll just go ahead and add the extra step. Identify your supply and demand zones. And then 3 is look for entry / wait for wait for break of structure. That's what BOS stands for. Break of structure confirmation. So what do I mean? Look for entry would be, okay, so I saw it go into the gray box. So I looked for my entry, right? I looked for the entry and then I entered right there. Okay, I'll point to the exact area I entered. I entered right there. Right there. You see where the black arrow is pointing? Right there. Okay. So look for your entry. We did that, and then I entered. Or the reason why I put slash is this is also a way. You can wait instead of enter where I did. You can wait until price breaks that liquidity. So you can either enter off the zone or you can wait for a break of structure. So that's the 3rd step, okay? I hope you guys got that down. We can rewind the video. And then the 4th step is you want to look for your risk to reward. So you want to take your tool out. You want to make sure you have the right stop loss, the right take profit, and you want to do whatever R&R that is. Our R&R is in the Discord, in my private community, and all that crap, and all that stuff. So we have our own R&R, but whatever R&R you use is cool too. And so I look for, on step 4, my risk to reward tool, and then I look for step 5. Step 5 is your take profit / liquidity. So step 5 would be take profit and liquidity. And so right there, I had my liquidity right there, and then I had the green line here. So the reason why I have two different lines that look different is because liquidity, this is a line that represents the liquidity, and this one isn't necessarily the liquidity, but below this green line. This line is here because this is just an area that I'm taking profit because it has a good support area. So that's areas where another area where I take profit. So you can go ahead and write this down. Step 1, identify your structure, where the market is going, 4 pieces of structure. Step 2 is identify your supply and demand zones, okay, your gray boxes, and those supply and demand zones can be fair value gaps, they can be order blocks, they can be Y cost schematics, they can be anything your trade ICT. Okay, so step 3 is look for entry. Step 3 is look for entry, or you can wait for a BOS to enter for your confirmation. Okay, and you can choose between any of those. I would recommend, if you're a beginner, to wait for a confirmation, which is wait. So instead of entering where I did, I would, if I were a beginner and I'm not so good at this, I would actually see that liquidity. I would wait for it to break the liquidity and then look for an entry. Okay. Okay. So step 4 is risk to reward tool. Okay. So we have my tool here. So stop loss, take profit, make sure you always have more reward than what you're risking. And step 5 is take profit liquidity, which we had here, which was the green line here, my take profit line, and my liquidity line. That's where I take profit. So my take profits are always double bottoms and double tops, and my take profits are always going to be the trend lines too. So if there's a trend line there that I can do, so trend lines and double bottoms are your liquidity. So I'm going to write that down too as a bonus tip. A bonus tip would be, hold on. Let me just write that down. Bonus tip would be to, oh yeah, that's what I just said. Bonus tip is always set your TP to at double tops and double bottoms / liquidity / trend line. Okay, so that is the bonus tip for today. And when I'm done setting this up, I want you guys to actually screenshot this and write this down in your journal. Bonus tip: always set your take profit at double tops and double bottoms / liquidity or liquidity areas or trend lines. Always set your take profits at double bottoms and double tops or liquidities areas. That's what it is in trend lines. Okay, so you have all the steps here. And if you try this and it does not work, message me on Instagram and I will talk to you, and you can show me your charts and we'll see what we can do for you, okay? So for now, I hope this helps, and I'll talk to you guys later. Peace.